And now I want to get super technical for my graduates, for those of you that have been here, because I haven't even revealed this to Stock Club until now. But the 5 things I want you to study for 2025, and this is around algorithmic trading and investing. Okay. So number 1, if you're working on an algorithm, I want you to find a way how to overcome decay in your signal and your algorithmic trading, right? So how do you do this? And one day, maybe when we do the mastermind, and maybe one day in Stock Club, I'll break this down. But number 1, you have to find harder to access alternative data sources and data sets. The great thing about large language models and algorithms is that it can take a bunch of data that it would be really hard for us to process in Excel, and you can upload it and it will disperse the data for you. This is why a good term for you to learn tonight is dispersion models. Put it in the chat. Dispersion models. I can get into plume theory later, but you want to study dispersion models to see where certain data points land. If you have 1 million data points, what are the averages of where that data may land? Because that's going to be based on your price, where to get in and be able to get out. Number 2, using more sophisticated feature engineering techniques. And number 3, you need to develop different approaches that combine hundreds or thousands of weak signals, so you can ultimately take those out and only focus on the strongest signals for when to get in and when to get out. So in Stock Club, I made a prediction about MicroStrategy. Didn't want to tell the internet because I like Michael Saylor. I don't want the Bitcoin maxis to come after me. The next day, Bitcoin fell, right? Shout to you, and some of you made 40, 50% off of that the next day. I use some of this modeling in combination with my crystal ball to be able to get that number to know that we're going to pull back. Number 2, developing a microstructure model. This is going to be really key. So 3rd, you need an adaptive sampling technique based on market volatility. So based on market volatility, you need to be able to have that algorithm tell you, in these kind of markets, this is going to be the performance. This is the top of the market. This is when you need to start to edge out. This is when you need to start to leg in, meaning to buy. Okay. Number 2, you need to get really tight noise filtering techniques. When building an algorithm is going to tell you a lot of times when you should get into the market, and they are not the 3rd or 4th or 5th best time to get in. Some algorithms will give you 60 signals per day. You don't want to use all 60. You may want to use 2, maximum 4. So you need some sophisticated filtering techniques to knock out the noise in your signals. And then number 1, you definitely need a hierarchical model that operates at different frequencies and different speeds to tell you different data. I know for some, this may be super high level, but it's time we go to a higher level. Shout out 19 Keys in our investing. Really quick, hardware considerations when building your AI supercomputer, fast as possible. I like the Ryzen chip from AMD. NVIDIA chips are amazing. You really need great network optimization. For those you are trading, always be paired in a hard line versus using Wi-Fi. But then if you can afford it, GPU clusters for parallel processing will help a hell of a lot to get you an edge in a market that others don't typically have. 3rd, signal risk metrics. So number 1, you need to focus on what strategy when building your algorithm gives you the highest and lowest drawdown. Drawdown means how much money you're losing. Just because you have an automation or algorithm, it doesn't mean that it's going to give you amazing return or alpha without giving you amazing drawdown. My first focus is always, how can I lose less money when I enter this trade and or long-term investment? That's my main focus, number 1. Number 3, you need volatility targeting. So if you are looking at the bond market, NASDAQ, German DAX, crude, you need to understand and have the algorithm tell you this market is a little bit too volatile for you to edge in. On these days, you're going to have better return. Ease up on the second Thursday of reporting, etc. Number 4, position size optimization. This is how many contracts are you trading your options or in your futures, right? It's really important. And a lot of times we get caught up in saying, I want to trade this size when the data says you should trade lower. Often in Red Panda, I've said whatever max size you want to trade, you can divide that by 4 if you want an easy number. But if you build an algorithm, it helps a hell of a lot for it to tell you what is my ideal position size. And this is going to be drawdown plus return plus time in market. So if you're in time and market for a short period of time and your trade wins really fast, it's low drawdown, that is a sign for what you should keep your position sizing at. And then also to how much leverage you should be using in any particular trade. Fourth thing, market structure. So you have to look at the exchange evolution, the participants who are in that exchange, the participant behavior for how they trade. This is why I say for futures in particular, it's better to trade the open and the close, because if you look at the data in the midday, it's a lot of choppiness based on who's in the market. You have to study who the market makers are in your particular market. That's why I said with AMC and GameStop, those were mega cap retail traders who used to be in hedge funds moving that market. Notice how crypto took off and no one's talking about AMC and GameStop anymore, because all of them went back to their crypto positions or went to then go run funds. Go on Amazon and Google anything about dark pools. One of the best returns on investment you will have is to understand how dark pools work. Some of you have asked me about order flow or level 2. Is that what I use? No, that's not what I use. But an interesting read is all the top books on dark pool dynamics to see how they affect your trading. And then scaling is most important. Number 3 probably should be number 1. And it's the reason why I lean on ES more than NASDAQ. There's a lot of liquidity in NASDAQ, but the most liquid future and has been is the S&P 500 future, the ES. Number 4, when you get your first algorithm down, it's a really fun process to then stack on multiple trades with multiple strategies using 1 or 2 contracts at a time. And when you start having some sophisticated algorithms tied together, that can also cut off your losses when things are not going in your favor. It helps your trading a hell of a lot. And number 5, going back to what I talked about earlier, finding an edge in the market, you need regular strategy tweaking or adaptation based on the market. So the market that we are in now post-election is dramatically different than the market was in February. You have to adjust. And this is why I tell everybody in Red Panda in particular, please listen. When I say focus on a short target, then a long one, when you start programming in your algo, you can't have 4 ATMs and 4 different targets, because now you have minimum 16 data sets that you have to test to know what your return is going to be. A lot easier to use 2 targets and then 2 strategies to get in. You have a smaller set of data to analyze, opposed to if you're running 6 or 7 different strategies with 6 and 7 different targets. It's going to take you probably 4 or 5 more months to get to where you need to be. But what do I know? Once again, I want to remind you, all investing is global. These are lessons from John Templeton that I need to remind you of. Number 2, always take a contrarian approach. At the time when NVIDIA was the hottest thing on earth to me, it was not to others. If you ever had bought the chip and saw how it affected performance, and it did for me when I helped put the computer together and start talking to quants, the performance, a lot of times when we had a trading room, I would see the move 2 or 3 seconds faster than everyone else in the room. That gave me a competitive advantage. Be sure to make the fundamentals of the trade that you are taking are good and of the company. I know SMCI has not been kicked out of the inner circle of NVIDIA, but anytime you get to cooking the books, and then a report came out today that accounting error was found by a Macy's employee and it hit 145 million. SMCI wasn't the only company that was cooking the books, I told you, but if the fundamentals are good, I can't put my money into it. There's no need to gamble when you can get almost a guaranteed return out of indexes, top 2 or 3 tech stocks, and if you trade once or twice a week, you're A-okay, and it will hit home runs there. Number 4, don't be afraid of big bets. Your car note and your mortgage payment should not be more than what you're putting into the market every month. I'm going to say it again. Your car note in combination with your mortgage should not be more than what you're putting into the market, especially if you know the company is going to be a home run. Number 5, we'll talk about it later. There's a lot of companies that could be a leader in quantum computing. They're not there yet. Wait for the leader to develop. You don't want to rush into a position unless you know for sure things are going to work well. And get away from the crowd. The less noise that is there, the stronger your thesis will be. And whenever you are in doubt, my favorite thing to do is look at a 90-year chart. No matter how much noise there is, and for every major pullback there was, and these gray lines indicate recession, the market is always recovered because the market is permanently rigged through a bunch of mechanisms to permanently stay up. Please don't forget that. And if we live in a decade of lost returns, what do? You build a base. There are some companies that may have a tough 3-4 year period. Build a base. And I want to give everyone credit in XLM, who I mentioned last year I thought would do well, but for everyone in XRP who stayed down through that 5 or 6 year struggle, it panned out and worked out incredibly well for you. And now there's some people trying to chase, and it's too late. If we ever enter a scenario where, let's say, tech stocks are flat or indexes are flat, you want to build a base and hold for a 10-year period. I love y'all dearly. The top lesson I want to give you from the Dream Team that I think has been most impactful, and shout out to those of you who are now hitting 20, 40 grand in your trades, staying off social, living your life, traveling. I'll see y'all. Ooh, I'm proud. Of course, the affirmation is first. You have to know that you deserve to be rich. You deserve to be wealthy. You deserve to be free. But the freedom is tied to the execution. But pick one target that if you only took 6 or 7 of those trades in the futures market, it would change your life forever. I know some of you have endless love for the market, but endless love does not mean endless trades. I've seen people in Dream Team go from making 2 or 3 grand a couple years ago and struggling, and now hitting 20, 30, 40s when they feel like. 22 contracts, 21 contracts, 400 points on NASDAQ. Amazing, right? But it takes time. But in combination with, if you build algo with it as well, it will tell you a lot of times when you should be getting into the market and when you should be staying free. We are in the official era of automation, as I called it in 2020. The era of efficiency, largely titled AI with large language models. And I think as a trader, if you are not building some sort of algorithm to aid you in your investing and trading, it's like you are Fred Flintstone in a car, pushing the car with your feet, opposing to have push to start. I love you guys. If I made you money, can I get a hell yeah and a yes in chat? I love you guys. Over and out.
All right. There you have it. There you have it, ladies and gentlemen.
Got to take it to the next level.
Yeah, man.
Tactical performance.
The day ones are like, oh my gosh, I remember that.
Yeah.
Tactical performance, as always. So much information, vitally important to actually, be able to provide real-time, tangible information that's digestible. So
yeah. And it sets you up, right? Like people are looking at it, like everybody's saying what they're going to do for the new year. They got weight loss goals. They got financial goals. Here's your investment strategy. This is it.
Absolutely.
It's laid out for you.
Yeah, for sure. And, the history speaks for itself as far as the rate of returns and the
talk to them.
predictions and all of that, man.